Shall we begin with the trends that you would say outrightly impacted activities in Nigeria's money market in the first half of the year 2019?
I think majorly was the major impact was actually on the election. So we're moving close to February before the postponement of the election. I think most of the investors were a bit wary and not too sure what will be the outcome. I think that impacted the market a bit. So there was a bit of happening in terms of investors from offshores and even local players. But thereafter, the presidential election, I think it became clearer what direction the elections actually was going to go. And so the interest actually came back. Outside that, the liquidity in the system has actually been a major factor. We've seen CBN actually come out to actually do a lot of mop-up through the OMO issuance and the government issues in federal government bond.
Now talking opposite, like you hinted earlier, we are actually seeing a lot of that in Nigeria's equities market. But what's it like at the money markets? I know that as of yesterday's trading, we saw reports that bonds market were bullish yesterday. What's it for the fixed income market? It's
been the same story since after election, like I said. A lot of interest have actually come to that space. We've seen the T-bills rate actually moved on the one-year paper from around 12.86 levels in the the second quarter of this year till about 12.40 right now. And the secondary market is even trading lower than that. But if you look at the issuance that actually was done via the OMO yesterday, it was around that level. I'm talking about discount rate now. I think on the bond, the same thing. If you look at the first issuance of the 30-year bond that was issued in April, it was issued at 14.9. Right now, it's trading around 14.5, 14.4 and do. So I think the interest have actually come to that space between the end of second quarter to the beginning of this third quarter.
As lackluster or dovish, if you would have it expressed like that, as the equities market have been in the first half of the year, we did see a couple of catalyzers that spiked interest from investors. What would you say of the money markets in that regard? Have we seen catalyzers, or are we likely to see anything that could shake up investor sentiments at this time?
I think generally it's just if you look at the global space, so more of the other factors, exogenous factors actually coming through, if we may say that. You've seen the tug of war around the trade talk between China and US. We've seen the oil price actually moved higher. Today it's trading around $66 per barrel. I think that's actually given a lot of investors some ammunition to actually to say, going forward, they can put on their risk at home. And because of that, we've seen a lot of investors from offshore players to local investors actually coming towards the space to invest in government securities, money market instruments, and so on and so forth. So I think the same thing is going to shape the direction, and coming from the fact that the CBN governor has actually outlined the plan for the next 5 years, which is actually very clear on how they're looking to play out on the macroeconomic stability, FX being on the prime list, and interest rates, and how to actually check inflation and GDP growth. So I think this is going to play out in terms of how they want to keep the exchange rate. We think the exchange rate is going to be very stable going forward, and we think they're going to play within this cycle of where the interest rate is trading right now. They don't want the interest rate to actually be highly elevated, but at the same time, I'm not too sure they want to see a single-digit interest rate immediately.
So looking at global dynamics now with regards to the trade truce and the oil talks, to what extent do you think that might impact, and of course, like you mentioned, talking about stabilizing the exchange rate, how do you reckon all of these dynamics could impact the nature of interventions from the CBN that the market will see going forward?
Well, the issue is that if you look at the cycle of all the mop-up they've done via the OMO, between now and the end of the year, we'll probably see a lot of maturity coming in, apart from the primary issue that actually be maturing, which will be a technical rover. And we'll always have maybe coupon payment coming through the FGM bond and few maturities coming in. So I think that's going to play out in terms of how much liquidity they have in the system going forward. And I think that's going to determine how much of mop-up they're going to do going forward again, considering the fact that they don't want too much of liquidity to be in the system, so that not to create so much of inflationary pressure. So I think that's going to be a major concern. In terms of how much issuance we're going to see, the primary window for the T-bills is most going to be a rollover, as it's maturing, they're actually issuing almost the same amount from the calendar we've seen. From the bond issuance, it's always been in a cycle of 100 billion that's been in the system, or that will be coming to the system from now to the end of the year, except probably in December, where they always slow down in terms of amounts they actually put on offer. And we've seen a lot of interest coming to that space too, although the last bond that was issued did not see much of subscription compared to the previous one. But I think by and large, we see a lot of interest coming from the FDIs and FPIs and most local players, insurance company, PFAs, and banks.